The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Tiger Technicians Hour is 11 o'clock till noon, as you can tell. And 877-927-6648 is the number to call. Let's just do a quick overview here. It's great to have Tom back, and of course, Larry. And, we this is really something. To have an entire day of analysis with all the different techniques that people have spent decades working on, I think that's something special, and I hope that you can get something out of it in this hour. So what we're looking at here is when we're doing an analysis of the different time frames, this is the 120-minute chart of the E-minis, which are down 450. You can see that in the previous example of the 120-minute chart in the buy mode, it went and made that oval pattern that I call the Chapman wave stalk leg formation, a long move to the upside regardless of the number of legs. Usually it's to a D, and then it stalls out. In this case, it went to a C, and then it kind of stalled out and went into this oval formation. Then it started for the neck and the head. It started a brand new A, B, C, D, and went to 2014 round number high. What was important about that October, around about the 9th high, was the beak of this particular pattern formed. There's the head. Let me just put it over there. And the beak formed, and it pulled back. There was that one Chapman wave, rogue wave, which went to 2014, was 75, 70 cents higher. But everything about it said, be careful. This is still a sell mode. And in fact, what happened was, went down to the 1982.50 level. Now, this is very important because in the Chapman wave methodology, the stalk leg formation, once it forms the beak, when the beak, that is the move that goes down to test the body high, in this case 1991.25, took it out, went to 9 points lower, 1982.50, and then it turned around. And what this particular methodology says that once there is a completion of the beak in the stalk leg, a stalk stands on one leg, you've got this very long oval body, and it seems to balance everything on the one leg, and then you get the neck and the head, and then you get the beak coming down. Now, what's really important about this is that when it completes, it starts a brand new push to the upside. Very often that turns out, and it was my fault for not recognizing just my own technique, that low is the thing to buy. Of course, you got to know when to buy it, because there's a move very often that starts another counter trend move to, I shouldn't say counter trend, it triggers another buy signal that goes to a buy mode. But whatever it does, it has a very sharp bounce off the low, in this case from 982 all the way to 999, I think it was, to 2000 in fact. 2000 exactly at 4 o'clock on the 15th of October. Pulled back for 120-minute bars and then took off again. So now the big question is that a leg? And this is the body? And now, let me make this bigger. Are we repeating the same thing again because patterns repeat? That would imply that we're going to push above 2028. Doesn't matter to say how high it goes, but it goes above that level. And then you've got to be careful because there's another neck, head, and then a beak formation comes back to break under 2028. Or I take this away completely and you can see something else here. You can also see that there's a pattern that's unfolding that basically says, you know what? You've made an arch formation from the low that was made on the 14th of October, 1982.50, and you are arching over. So I'm going to put the two patterns together now that I've done that. There's a pattern that says, at any point in the next 2 days, if you take out today's low of 2014.25, we're at 2021 right now, down 4. If you take that out, there's a good chance you're going to test the low of 2012.25 made at 4 o'clock on the 16th. If you do that, you're going to go quite a bit lower. Otherwise, This is the pattern that we're going to be looking at. A test that doesn't take out today's low, and then out of the blue, there's a sudden spike to the upside, and that's the one we're going to be careful of. Except that it's also saying, basically, that you're in a trading, there's a lot of resistance in this 2028 area in the S&P futures. And it can go a little higher, but in fact, we're in the area that says consolidation. That's what I said to subscribers on my opening call this morning. Consolidation unfolding. Shouldn't go all that far down. We did take a position in the volatility index, stopped out real quickly for a fairly small loss in a very small position. But what's really important about it is telling me now that the VIX, look at this, the VIX is at VIX.X, the VIX is at 1541, down up 36 cents. Most importantly, it is the stochastic is still pointing down instead of being up. In fact, the VIX right now should be at about, what was the high of the day, 16 something, yeah, 1623. It should be at about 1650, and the Dow should be down minus 80, and the S&P should be down minus 7 to minus 8. So what this is saying is, and now this is going to be very interesting, what this is saying through the volatility index, I'm going to just move this 120-minute chart away, is that don't be too quick to go to the short side. We've had a lot of shorting, but in fact, there's still enough internal strength left to alleviate a sharp move down, but rather go more sideways and, in fact, have another couple of tries to the upside. And that's the way you're going to be looking at it. It was a wonderful test this morning of internal strength or weakness. As I see it right now, let me show you a couple of things here. GE, look at this. It's now up 22 cents. This is a leader. General Electric is a leader out of my Dow Quartet. Look at IBM. IBM down $1.23. It's just not acting all that well. But now look at Triple M. Not MM, Triple M. Triple M holding very well after making an alternate count D/C. And most importantly is that the weekly chart is just now starting to find a little bit of strength at 148. It's down just 68 cents. 146.15 is the 9-period moving average in the weekly chart. That's going to be key. And UTX, my more intermediate term pilot light indicator, saying, hey, I'm struggling here. So we've got something very interesting. There's another stock that I've been speaking about, CTAS, that is Cintas Corporation, overalls, clothing, really an integral part of the fabric of the economy, holding beautifully up 9 cents at 92.64. We've got a couple of things that we're watching real closely, and it's giving me signs here that say, now you've got to be a little bit careful about shorting. Look at this, IBB. The IBB is at this particular point up 3 at 317.66. Question I keep getting asked is, why haven't you reshort? Why haven't you added to your short position? I don't really see any reason at this particular point why I should add to the position, because I'm waiting for a test, I said, of the 318 to 322 area. Let's see what happens when it gets there, because all I can say is that at this particular point, the IBB is extremely oversold. It deserves a little bit of a bounce. The big thing is, how will it handle the recent October the 5th high of 323.59? Does it break it significantly to try to get to the 337 level of the 200-period moving average or not? As we're about to go to a break in a few minutes, let me just run all the numbers here. The Dow is, at this point, down only 23 at 17,192. S&P is down 265 at 2,030 what? 30. The comp index is up 13 at 48.99. Gold is down 12 at 11.70. Now this is I think is important. Look, GLD, peak D. At peak D, what do you expect, especially when you've just jumped the 200-period moving average? You expect a retest, and we're doing exactly now at 112.12. 112.14 is really the 200-period moving average. And the 9-period moving average is at 11.68 to 111.68 to 111.01. That's your support level. My thinking here is that, let me show you something. The dollar being up, it's up quite sharply now, up 39 cents at 94.93. Did break key support levels, but you remember what we just saw in the, whatever it was that just popped over the, was it the GLD? Was that the GLD? No, wait a minute. GLD. Yeah, just popped over the 200-period exponential moving average now, and now it's coming back to do a retest. So the dollar went just under the 200-period moving average in the daily, and now it's trying to get back to see if it's got support and if it can hold above the 9-period moving average. Weekly chart, as I said before, is just in a sideways trading range. If you look at the EUR-USD, euro-dollar currency pair, there's the inverted H, the soft W formation, and it's just making a series of these. It has resistance at 1.138, and it's at 1.131 right now, down 0.003. And if you look at the USD JPY, it's just in a sideways trading range. And now we're going to look at the bonds, TLT. Bonds were down earlier. Now they're still down 81 cents at 123.30. What I think I'm looking at here, so let me just look at the 120-minute chart. 120-minute chart made a peak G. Now it started and it hit the 200-period moving average. Oh, I love these techniques. A, B, C. And what do we expect in the Chapman wave methodology? You expect from the lowest low bar, in this case, that little bar right there, you expect, especially with a test of the 200-period moving average, a peak A. If it goes to B and holds nicely on the 9-period moving average and then pops higher, that should take you from a buy signal to a buy mode. And there it is. It goes A, B, C, and you expect 4 successively higher peaks, 7 waves to the upside. Look, 1, 2, 3, 4, 5, 6, 7 is the one that you always look for, and lo and behold, we get a sell signal going to a sell mode in the 120-minute chart, and that, I think, is giving us a clue that there's still inner strength in the market. One of the reasons why we have long positions, one of the reasons why we have short positions. This is a bifurcated market. I think that you can go long, I think you can go short, and you just put in your stops or buy stops and let it be. Now, let me, one thing I'm missing here is crude, high-grade, 2 things. High-grade copper, oops, wrong place. High-grade copper is not doing all that well. Yeah, right. Look, it went to a peak C1, peak C2, pulling back sharply, but stuck in a trading range. Most of these indexes and commodities are kind of stuck in a trading range right now. Look at crude oil, CL. At CL, there's a continuous contract. Yeah, you see, it went to a peak B. It has these sideways moves and then a sudden spike to the upside. Sideways move, maybe there'll be another spike to the upside. But it's really just, crude oil is stuck between 52 and about 40 and about 42 in over the coming week. I think that's the kind of range we're looking at. What am I missing here? Oh, IWM. IWM right now is holding quite nicely, actually. Look at that. The monthly chart doesn't look well. It's holding. The technicals do not look good, but it's still under the 117, I believe. Yep, 117.44 9-period moving average, and the QQQ, which I didn't get to, is actually moving quite nicely. Oh, it's worth talking about this when we get back. This is leg D in the 120-minute chart. Very nice. I'll be back. Basil Chapman, Tiger Technicians Hour. Be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Dow's just down 26. S&P's down minus 2.23. Here's the New York Stock Exchange little cup formation going to a peak C. I really have to call that a peak C. There's no other thing I can call it. So peak C, there should be one little pop to the upside. In fact, it's kind of what I was looking for today. Some pullback, maybe a bit of a pop, and then another decline into Tuesday, maybe Wednesday, but not that deep a decline. The way the MACD is and the stochastic is in the daily charts, especially the way the weekly charts have been improving. Yeah, look at this New York Stock Exchange. The MACD histogram is just beginning to decline, but it's still very, very strong. And if you're looking at the green line, the 9-period differential, look how high that is. It's going exactly with the chart formation. Now, what I've been talking to, not talking, but mentioning to subscribers for the past week, is that this leg from that doji low of the 29th, Look at this leg here. Here's the New York Stock Exchange. Forget about all this stuff on the right here. These are let me even put the 120 minutes in the corner. But let's just say that I only want to look at this particular moment at this leg right here. Here's the New York Stock Exchange. Look how powerful all these, the stochastic has gone in this M formation to 92%. That's very good. To get below 80%, to get into the 76% area, which says, now you got to be careful. You'd have to see the New York Stock Exchange down 34 right now from 10,387, having Friday hit 10,424.99. Let me just say 99. Let me put this in. 10,424. 24, did I say? Good grief. Just 1 second ago I said it. How come it's just gone away? Yep, that's it. And just on Friday, and now we're looking at it holding quite well. 9-period moving average is at 10,299, and the next one is at 10,239. I just don't see it. In fact, why don't we do this? Let's go to my Chapman wave projection charts. INDU. Oh no, we're not. We're looking at the NYA. NYA.X. NYA.X. New York Stock Exchange. There it is. So up there at 10,640 is very strong resistance in the daily. The 120-minute chart is, I don't have anything there. And I have 10,523, all of them much higher in the New York Stock Exchange. I have a lot of support, but way down the 10,280 to 10,168 level. So far, the bias, just based on this, the projections, says there's more leverage to the upside right now, just short term, than the downside. Now let's look at let's go back. Let's just do the Dow Diamonds for the Dow, and I'm looking at 172.67 to 173.75, and the high on this morning was 171.96. So, yep, that's all well with under, and it's got tremendous support at 169.71 to 168.17. Let's look at the SPY. SPY has resistance at 205. You see, what I'm looking at here, and in the 100 and the 10-minute chart, 203.29, 203.27, 203.43, 203.47. These are all resistance, a plethora of resistance levels. So when I tried to put that together, I thought, okay, we could have a sudden slide to the downside, and we could see an extension to the downside into Tuesday if it's just a consolidation. If it is a sharper move, if the Dow closes down 130 points, let's just put it this way, if the Dow closes under 17,000 in the next 2 days, you're going to see a longer time constraint before it can rally sharply. But here's the real issue, that the VIX index, the volatility index, while it has a little bit of upside resistance, and it has supported 13.26, and right now it's at 15.22. 13.26 is quite a way down. That's like 130 to 150 points or more on the upside. So as I see it right, and yeah, actually I need to do this. Let's go to the volatility index, and we're going to look at it in the different time frames, and you can see something really interesting. So I looked at an F/B in the 120 minutes saying, hey, we could have a nice pop-up this morning. It's holding the pop-up is the concern, not just popping up, anything pop up. You wanted to hold in the 1620s. High today was only 15. Oh, is it 16? Yeah, it hit 16. Oh, 1623. Well, 1620s is just the start, because 1706 is a 9-period exponential moving average in the daily. It has not closed above it since the 30th of September. This VIX index, let me put it this way. I make it real simple. I only look at numbers. The VIX in the teens, mid-teens, especially going below the 15 area, shows buying pressure. And look at this inverted V-shaped pattern, what I call the Eiffel Tower in the weekly, and look at the monthly. It's suggesting there's still buying pressure. That's the very interesting thing here. I'll be back. We'll look at a few stocks when I get back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just write this down. Good. Got it. Okay. So this is what I was saying before, is that as I read the volatility index, I think that we're looking at limited upside just for the moment, I'm talking about right now, and downside has the potential to test us at 15, to test the 14s, but it's close to at least a bounce, a little bit more of a bounce with consequence in terms of maybe time. Maybe not so much price, and maybe it bounces for a couple of days, 2-3 days. But most importantly, what I'm looking at here is that I believe that through the rotational aspect, we are looking at buying pressure, and that buying pressure is related to certain stocks and bounces within certain categories that were very weak before. Let's go to Lou in Nashua. Lou, how are you?
Fine, Basil. How are you?
Well, thank you. You'd like to...
I was thinking of shorting the miners.
So if you were shorting the miners, you would use DUS, the Direction Daily Gold Miner?
Yes.
Have you ever used DZZ? That's another one. That's the double short.
No, yes, I had used that before.
Okay, so I mean they work the same way. It's just that dust. Well, let me just double check here before I do anything else. DZZ. So he's up 6.73%. Yeah, there's a really big difference in the price movement. And I think if you really want some activity, you want to be in the dust or the what's the positive side? Nugget. There you are. Thank you, Mike. In the den. So this is what I'm looking at here. If I do an analysis of the dollar is merely showing that it's stuck in a range. It's begun to make lower lows and lower highs, but until the dollar really at 94.96 I don't think it can just push there. It has to hold. In other words, it has to get to the 95.60s. Try to touch 95, 94, the 200-period moving average that most fund managers look at. That's the simple moving average. And then all of a sudden I say, hey, it's stuck in the trading range, but it looks on the short term that it suddenly changed its modus operandi and it's starting to make higher highs and higher lows. That doesn't say how high it can go. It's just saying that it's raising the base, but it's also raising the upside. So now let me go to gold, because this is directly related, because they do continue to have this mirror image. And my gold itself, I have either an alternate account E/C for the daily chart, but when I look at the weekly chart has done very well. Very well doesn't mean to say you might be looking at the same thing, that gold can't come down and test. It's at 1170 right now, test the 163 to 152 area, somewhere in that range, and maybe then it'll find some support. 151 is the 9-period moving average. So if you were to do anything, it would be on a very short-term basis, and the only way I could think of that on a short-term basis is to probably go for a more leveraged position. Now the dust, A, B. The reason why this is just a little difficult is because the moves are so big. I mean, it's up 96 cents today. That's 7.42. So if I say to you to nibble on a little bit right now, I have to say also that you've got to have a good tolerance because if it only pulls back 35 cents, 35 cents is almost 60%. About, well, let's put it this way. 35 cents would be about a 35 to 40 cent move down in the gain that's already made this morning. So this is what I'm going to suggest to you. On the very short term, as of this moment that we're speaking now, it could change over the period of the day. I'm not sure that this trend is going to go more than a day or two consolidating, and then I think the Dow is going to try to go a little higher if it does consolidate. And my feeling is that gold has been moving, the gold and the market have been moving back like they had done previously. Together they're moving on the upside. So I'm not sure that, if you'd called me earlier and if the dust was not at 1377 but at 1361, somewhere around there, I'd say, you know what, you could nibble on this, but then I feel quite comfortable saying, look, you've got to have maybe a 2% risk at least if you're playing something as leveraged as this. Now I have to say to you, are you prepared to have a 3.5 to 4% risk? I'm only looking at risk. Why? Because I think that that dust could go to 1452, the 9-period exponential moving average of the daily chart, and then maybe have some resistance. But the stochastic is still very flat and the MACD hasn't turned. So this is a move. It's either very early in its move because it's going to go much higher, or it's having a bounce. And at this point, I have to put it into the bounce category. So I don't think you really want a 4%. Do you want a 4% risk? If you do, then I'm going to say nibble here, and you won't be able to get your full position, not the way I would be trading it. I just don't know if that's really what you want.
Right.
And you wouldn't be playing options or anything. You'd actually be buying dust, right?
That's right.
Yeah, it's and it's holding right now. Oh, it's now up 1, so it's not giving back any with the market rally. The best I could say to you is, Lou, wait for a little bit of a pullback. Let me look intraday if I can go to a 10-minute chart. Let me put dust here, DUST. It's already had a spectacular move. A, B, C, D, E. Let's call that E. A, B, C, D, E, and it's in F. Maybe it's in F right now. 79, 79. Yeah. Oh, you know what I'm going to suggest? If you want to trade dust, and it really, I would only think of it in the very, very short term. If it pulls back, and it has to be today, it's now 11:45 Eastern time. If by 1:30, I wouldn't do it later than 1:30, but if by 1:30 it's actually pulled back a little bit, instead of being at 1380, it's somewhere in the 13. I'd be much more comfortable 1350 to 1345. I'd say you can have just a small position, and then you're expecting overnight that the dollar stays strong, that gold moves up overnight, and tomorrow there's a sudden spike again in the gold. Oh, gold is a pullback down. I mean, a spike to the downside in gold, and that'll allow you to be in the position and to move your stop much, much higher. Now it's even moving higher than that. It's up $1.03. I think you've got your eye on something. I'm just looking at risk reward, and that's the only thing. Oh, I know exactly what I would say to you. You know, whatever position you were going to take before, you've got to take a much smaller position now.
Right.
So I would start a small position now. I know that this is the kind of thing that is closer to your style. You could take a little position now, 1385. I would add to it, if today it pulls back to 13, I still wouldn't want to pay more than 1355. 1355, and if it gets away tomorrow and it moves to the upside, you're in it, but only for a small position. But really, 1355 is why I'd be able to say to you, at that point, a 25-cent stop on your dust, I'd feel much more comfortable. That's a position that I feel is handleable. Why? Because if it does move to what I was saying in the daily chart, 1454, that's still a very nice move. So that's the way I would do it. A little nibble here, saying it's kind of the high for this moment, but at 1355-ish, 1360 to maybe 1355, a little later in the day, I would add a little bit more. I would not get the full position, because the full position, I think, was really Friday. And now the risk is becoming a little bit more. Why? Because we don't know in the dollar. You see, when I'm looking at the dollar, the way it's moving up now, it looks quite a lot like dust, but there's a lot of resistance just a little bit above. So how the dollar handles it is going to be important. So I think you have your eye on the right thing. It's just money management. That's really what I'm looking at. So a little pullback, a little nibble, and then in the 55 area, that's where you want to add a little bit more. If that suits your style. But what I am saying is that dust, as I see it right now, would try for 1454. That's the 9-period moving average. And if it takes that out, that might be a move that could actually last the whole week as it pulls back and then makes the leg B. And then you're looking at something different. So if you are in it. So, and the other thing is, if you're looking at the different currencies, you see the USD JPY is trying to rally a little bit here. Therefore, the euro should be a little bit weaker, and the euro is weaker. So you got your eye on the prize. I think in the very short term, it's just a trade. So I hope that helps you.
Appreciate it. Yes, it does. Always. Thank you.
Thank you for calling. That's Lou Nasher. We're looking at dust. I actually also mentioned the HUI. Well, I've given him my reasoning. I'll look at the HUI. Yep. Also peak D. It should be pulling back a little bit more. It's got a lot of support. It's at the 130.63 support level of the 9-period moving average. Well, it's just a fraction lower, 130.57. And 127.13 is really strong support. But I think he has. I think that was a good eye. You looked at the right thing, at least in the very short term. Okay, well, let's go on. And I want to look at, so I was asked about Amazon. Amazon, no use typing it in there. Type it in there. AMZN. Oh, there are a bunch of things I also wanted to talk about. So Amazon's in a leg C. Oh, this is very interesting. So it broke while I was away. It broke, I was out Friday. So it broke that support. It's in a leg C. It's trying to tackle the 580.57 all-time high. If it goes to 580.58, that starts leg D in the monthly chart. This is quite nice. This is Amazon, 96% in the MACD, in the stochastic. MACD is strong. It's the weekly. I remember I was a little concerned about the weekly chart. Well, price is moving and price is the arbiter of the trend. So that's what we're looking at. And there's that it's into the wick of the candle. Oh, everything here says that Amazon should try for an all-time high. Let's look at, and then the support on Amazon short term is, and today it's up 7 at 577, and the support is at 577. The support is right there at 573. If it takes out 573 in the next day or two, that could start peak C, and then you'd be looking for leg D. So now we're looking at, I wanted Amazon. I want you to look at Google. I'm looking at the wrong Google. We want Google L, right? Google. Not fruitful, but Google. Google L. There it is. Hit the right buttons, mister. There it is. So we've got A. Now this is what I've been speaking about. I was going to go back to it, and this is a really good example. You see, this has gone A from the low of late September 27th, was it? The 24th, of course. 24th, it goes peak A, pulls back, and then it goes A, B, C, D. And it has a full A, B, C, D inside buy mode. Gives a sharp pullback at the peak D. Now the question is this just an extension of E, or is it E/B? And a lot of what I'm looking at here says, look, so now what we've got is E says, hey, be careful. B says, wow, buy every dip, right? Okay, wait a minute. So now we're looking at that. Let me go back to the SPY. Remember the SPY with that Chapman wave price volume spike low that said you got 28 days without touching that area of the 182s, which it did, and 186.93 was the first pullback. But this particular move that we're looking at here, I've been saying that all the characteristics of the takeoff, I even spent some time showing you my show, I think last week, Monday or Tuesday must have been, that the move up here, especially from a doji low, the move from the 30th, from 29th of September, I think way up to 29th of September, has all the characteristics of a buy signal going to a buy mode. And I'm kind of feeling right now that I think that was a correct assessment. This is D/C right now in the SPY. The diamonds have F/C, a B, and was the stochastic at 93% of the MACD good? This is, and also the 120-minute chart having made a peak B. This is the thing that I looked at over the weekend. Even though I was in Toronto, and I hadn't been to Toronto for maybe 10 years, and then I just went in and out. Basically, I kind of went in and out this time as well. But most important, I will look at that, Jay, in a moment. Most importantly, I was very impressed with a number of things. I was impressed with some of the designs of the buildings. Now, I don't know, livability, I'm not in it. I'm just looking at designs, like looking at automobiles, just looking at design. Driving is another thing. But I really enjoyed looking at them. And I was also fascinated. I'd forgotten that Toronto has these big enclaves. Out of the blue, you'll get these huge, giant skyscrapers, not skyscrapers, but very big complexes with maybe 1,000 people. And then another one next to another one. And quite nicely designed. And I thought that was very interesting. Then I managed, I spoke to someone who works in real estate. They basically try to buy properties that no one's seen before or looked at in the way that they look at it as developments. And as he said, it's becoming more and more difficult. You've got to actually fight to get your property. And I thought that is interesting. That is very interesting. These are professionals who are vying with one another. And I think that it's worth talking a little bit about. I'll talk about it in a moment. I'll be back. Basil Chapman. We've got a break coming up. This is the Tiger Technician's Hour. Be right back. Now there's only 6. S&P's up 18 cents.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Yes, we've got programming all day. Just check it out. It's really terrific that this is such a valuable medium. I hear from people all over the show, all over the world, actually, when people send emails and say, oh, we just love listening to TFNN. Okay, let's get to the nitty-gritties here. I was asked a couple of questions in the den. I thought I'd go through them right now. PYPL is PayPal. I'm not sure quite what the story is there, but I've just got a chart in front of me, and the chart is actually looking pretty good. So that was one that we looked at. I'm just finishing up here. The cup. This is the cup and handle pattern in ED, which is consolidated Edison. I think it might have just become a little toppy right now, but I just see it in the trading range. This is trading at 66.25, down 77 cents. Very nice. I hadn't looked at it for a while. In fact, it's had a spectacular run in the last Since midsummer. It's gone from the 200-period moving average of 58 right up to the 67 area, trading right now at 66.25. Weekly chart, same sort of thing, just a little consolidation here, and then we'll see if it holds between 65 and 64 support over the next week and a half, and in fact tries to, absolutely, if it goes above yesterday's high, Friday's high of 67.45, I have to consider that's going to be new leg C. So that would be very positive on the week. And the monthly chart is G/B in the upper range. Consolidated Edison. I used to have this absolutely notated because I knew someone who had asked me in great detail back in 2007, I think it was, about it. So I've been looking at it very closely. I don't know why I've lost notation, but it's just saying, hey, I'm in this trading range right now, moving towards the upper end of the 67, 68. Maybe I will test the old high of 72.25, but at least for now, I'm holding, and I could consolidate a little bit with maybe a 1.5 to 2 points low. I can just tell you this, that if consolidated as and starts trading in the 64s, I'd say, hey, now you got to be a little bit careful. Upside is limited. All right, so let's do a couple of things here. So the utilities, the REITs, all rotating back up again. Yeah, this is very interesting. Remember the IYR, which I looked at, thought I'd like to go long. I just missed getting a position, fractionally missed it, and I haven't gone back in. And here it is in leg D, almost close to the 76 level with a 200-period smooth moving averages. It has 74 to 73, very strong support, and it's at 75.54. The weekly chart is definitely improving a lot. This says something about sector rotation, and that's very important to note. Another question I had was, where was it? I lost it. Oh, I looked at it before. We were looking at, there's the PayPal. That's the chart I want to look at. So this is holding very nicely. And we looked at Google. Now, if I'm going to look at the NASDAQ stocks, we want to look at Apple because Apple is in this sideways trading range. I think that Apple's going to trade, I'd said it before, it's just stuck in a range. The upper end of the range is at 111.11 right now, 511s, up 7 cents. But in the meantime, back at the range, I think that Apple's going to have a tough time breaking out, and I think that the 115 to 116 is really tough resistance, and on the downside, a snap through the support of 107 going to 106.30 puts it into a different ball game. It says, okay, lower highs now and lower lows. I'm still in a consolidation, but with lower highs and lower lows, I'm just not going anywhere. And it's an important thing because it does impact the NASDAQ. So the QQQ series right now is trading up 60 cents at 108.72. Now, what's really important about it is that 108.74, it's already gone to 108.81. So this isn't just C. This is overlapping. This is a D. This is very interesting. So the Qs are actually acting quite nicely here. Just because we're going to we're done with the show, I'm just going to do a couple of things right now. I just want to mention that the Dow, I think, is still in this consolidation, but what it's doing over the last 2 days is it's trying to form some kind of a base. 17,000 near term is what you've got to be watching for. Close below says, okay, you can go a little bit lower.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.